Good evening. Tonight, we're witnessing a moment that could reshape the financial world as we know it. A moment that's sending shockwaves through boardrooms, trading floors, and even the wallets of everyday people. Let's talk about money, specifically, the US dollar. For most of us, the dollar is more than just paper or numbers on a screen. It's the currency that sets the price of oil, gold, and even your morning coffee. It's the invisible thread that ties together economies from New York to Nairobi. For decades, the world has run on dollars. The greenback has been the backbone of global trade, the safe haven in times of crisis, and the measuring stick for wealth and power. From central banks to street vendors, everyone has relied on the dollar's stability. But this week, something shifted. A tremor in the financial landscape that could become an earthquake. The world's economic balance is no longer as certain as it once was. The BRICS nations, Brazil, Russia, India, China, South Africa, and their newest members, have just unveiled a bold new experiment, a gold-backed digital currency called the unit. This isn't just a new coin or a flashy app, it's a statement of intent from countries representing billions of people. The name may sound bland, but its impact is anything but. The unit is designed to be more than a symbol. It's a tool for rewriting the rules of global finance. It's a direct shot at the heart of the dollar's supremacy. This isn't just a new payment app, it's a direct challenge to the dollar's dominance. For the first time in generations, a credible alternative is on the table, one that's backed by gold, not just promises. The announcement, made at a high-profile summit in Shanghai, was loaded with symbolism. Leaders representing nearly half the world's population stood shoulder to shoulder before gleaming gold bars, declaring their intent to chart a new financial course, one free from the influence of Washington and Wall Street. The unit's goal? To create a fair, stable system for international trade, free from US control. Imagine a world where oil, wheat, and microchips are traded in a currency that isn't tied to American interests. That's the vision the BRICS are selling, and many countries are listening. This is a high-stakes move, with the future of the global financial order on the table. Traders are glued to their screens, central bankers are holding emergency meetings, and governments everywhere are recalculating their strategies. The dollar's dominance affects everything from your coffee to your gas tank, giving the US immense power. When the dollar is strong, imports are cheap and inflation is low. When it's weak, the world feels the pain. The US has long enjoyed the privilege of printing the world's reserve currency, a privilege now under threat. The unit is the boldest attempt yet to break that privilege. It's not just about economics, it's about sovereignty, leverage, and the ability to set your own rules. For countries tired of dollar-based sanctions and financial pressure, the unit offers a new path. For years, de-dollarization was just a theory. Economists debated it, politicians warned about it, but few believed it would ever happen. Now, it's reality. The first domino has fallen, and others may soon follow. As of today, January 24, 2026, the unit is live, piloted for commodity settlements between member states. Oil, gas, and agricultural products are already being traded in this new currency, bypassing the dollar entirely. The world is watching to see if it works, and if it spreads. This is the first crack in the dam of dollar dominance. It may seem small now, but history is full of moments that started quietly and ended up changing everything. The dam may not burst today, but its integrity is compromised. Financial experts are debating how long the dollar can hold its ground, and what comes next, if it doesn't. The endgame for the dollar's absolute dominance may have just begun. The world's financial weather is changing, and no one knows exactly how the storm will play out. When the world's money changes, everything changes with it. From the price of bread in Brazil to the cost of fuel in France, the ripple effects will be felt everywhere. The shot heard round the financial world has been fired. Now we wait to see where the shockwaves will land, how did the US dollar become the world's default currency, the financial roommate who always seems to be in your kitchen, eating everyone's food? It's a story of war, gold, oil, and a bit of luck. Let's rewind to 1944. The world was reeling from the devastation of World War II. Most of Europe and Asia lay in ruins, their economies shattered, their currencies unstable. But the United States? It was the only major economy left standing, its factories humming, its gold reserves overflowing, and its currency trusted. At a small town in New Hampshire, world leaders gathered for the Bretton Woods Conference. They needed a new system to rebuild the global economy. The solution? Peg all major currencies to the US dollar and peg the dollar to gold. This made the dollar as good as gold and every other currency as good as the dollar. the dollar became the world's reserve currency, backed by the largest gold reserves on the planet. Central banks everywhere started holding dollars instead of gold, trusting that the US would always honor the exchange. This system worked for a while, but by the 1960s the US was spending heavily on the Vietnam War, on ambitious social programs, and on global investments. The amount of dollars in circulation began to outpace the gold in Fort Knox. Other countries, especially France, started to worry. They demanded their gold back in exchange for their dollars, shipping literal tons of gold across the ocean. The US gold reserves began to dwindle. In 1971, President Nixon made a dramatic announcement. The US would no longer exchange dollars for gold. Many feared this would trigger a global financial disaster. But something unexpected happened. The world kept using the dollar anyway. Why? Oil. The US struck a deal with Saudi Arabia and OPEC. Oil would be sold only in dollars. This created a new kind of gold, the petrodollar, and ensured that every country needed dollars to buy energy. The US-Saudi deal meant that global demand for dollars was now tied to the world's most vital resource. Countries everywhere scrambled to earn or borrow dollars, cementing its dominance. The dollar was now backed not by gold but by oil, trust, and the sheer size of the US economy. Wall Street became the world's financial capital, and the dollar became the currency of global trade, investment, and savings. Everyone used the dollar because everyone else did. This created a powerful network effect. If you wanted to do business internationally, you needed dollars. It became the world's financial language. This system gave the US enormous power and privilege. It could borrow cheaply, run deficits, and influence global finance in ways no other country could. The dollar was the world's financial roommate. Always present, always hungry. But now, the BRICS nations, Brazil, Russia, India, China, and South Africa, are trying to change the game. They're building new financial systems, trading in their own currencies, and challenging the dollar's dominance. The world's financial operating system is up for grabs. New technologies, shifting alliances, and rising powers are all testing the dollar's grip. The big question: can anyone really replace the dollar? Or will it remain the world's default roommate, eating everyone's economic lunch for years to come? Who are the BRICS? Originally, just a catchy acronym for Brazil, Russia, India, and China, emerging economies seeking a bigger role. They felt sidelined by Western-dominated institutions like the IMF and World Bank. Over time, BRICS became a real alliance, creating their own development bank and reserve fund. In 2024, they expanded, adding major oil producers and new members, gaining leverage over global energy. Now, BRICS Plus is a formidable bloc, united by the goal of building a financial system not controlled by the West. The US has long used its financial power as a weapon, imposing sanctions that can freeze entire countries out of the global economy. The turning point came in 2022, when the US and allies froze $300 billion of Russia's reserves. The message: your dollar savings aren't truly yours, they're subject to US approval. This shattered trust in the dollar as a neutral reserve. For many countries, de-dollarization became a matter of national security. The BRICS group accelerated efforts to build alternatives, including their own payment systems. Economic independence in a dollar world was revealed as an illusion. The stage was set for a new, neutral settlement asset. So, what is the unit? It's not for your morning coffee. It's a digital settlement asset for cross-border trade. Its value comes from a basket: 40% member currencies, 60% physical gold. Built on a secure private blockchain, it's designed for stability and trust. Example: China buys soybeans from Brazil, settling in units, bypassing the dollar and US banks. Net balances can be settled with gold or rolled over. The unit's design aims for stability, neutrality, and a hedge against inflation. It's a direct appeal to countries tired of US control. The BRICS are offering a new financial highway: no US tolls. The unit is a bold experiment in global finance. Will it work? That's the trillion-dollar question. The recent move by BRICS nations marks the climax of a slow but steady shift away from the US dollar's dominance in global finance. For decades, the dollar has been the world's reserve currency, underpinning international trade and investment. But now, a new era is emerging as countries seek alternatives to the dollar's hegemony. The dollar's share of global reserves has dropped significantly, falling from 71% in 2000 to just 58% today. This decline isn't just a number. It reflects a growing lack of confidence in the dollar's long-term value and stability. Central banks around the world, especially those in BRICS countries, are responding by buying record amounts of gold. Gold is seen as a safe haven, a store of value that isn't tied to any one country's fortunes. At the same time, trade in non-dollar currencies is surging. China, for example, now settles half of its cross-border trade in yuan, a dramatic increase from just a few years ago. This shift is reshaping the way global commerce is conducted. Russia and India are following suit, forging new trade agreements that bypass the dollar entirely. These countries are actively seeking to reduce their dependence on the US financial system. Even Saudi Arabia, long a pillar of the petrodollar system, now sells oil to China in yuan. This is a historic change, signaling a major realignment in global energy markets. These are seismic shifts in the global financial system, not just symbolic gestures. They represent a fundamental rethinking of how value is stored and exchanged worldwide. Meanwhile, US debt has soared past $40 trillion, raising serious doubts about the dollar's long-term stability. As America's fiscal position weakens, the world is taking notice. For many investors and central banks, holding dollars now looks increasingly risky. The old certainties are fading, replaced by a new sense of caution and diversification. The introduction of the unit, a new gold-backed currency, is a direct response to these vulnerabilities. It's designed to offer a stable alternative, backed by tangible assets rather than debt. Around the world, countries are diversifying away from the dollar, building portfolios that include a wider range of currencies and assets. This trend is accelerating as trust in the dollar wanes. The financial landscape is changing fast. What was once unthinkable is now becoming reality as the world adapts to a new era of multipolar finance and currency competition. But BRICS isn't a perfectly unified bloc. China and India are rivals, not best friends. India fears the unit could become a tool for Chinese dominance. The economies are wildly different. China is an industrial giant. Brazil and Russia are commodity exporters. India is services-driven. South Africa faces deep challenges. Agreeing on monetary policy is tough. Trust is an issue. Would Brazil or India really trust a system led by China and Russia? For now, BRICS is a marriage of convenience, united by a common grievance. As the unit moves from theory to practice, internal contradictions will surface. Its success depends on whether these diverse nations can stay united. How has the US responded? Publicly, with confidence; privately, with concern. The unit is seen as a real threat. The US is considering secondary sanctions on institutions using the unit, forcing a choice: BRICS or the dollar. There's talk of trade wars and tariffs. But this could backfire, pushing BRICS members closer together. The US is also exploring a digital dollar to compete technologically. But the real challenge is fixing its own problems: debt, political instability, and overuse of sanctions. Without real reform, US dominance will keep eroding. The world is watching how America responds. The next moves are critical. Despite the momentum, dethroning the dollar is incredibly hard. The dollar's dominance is built on deep, structural advantages: trust, liquidity, and the world's deepest financial markets. US treasuries are the global benchmark for safety. China's yuan faces capital controls. Other currencies lack the dollar's global reach. Trust matters. Many still prefer US legal protections over opaque systems elsewhere. The dollar is backed by the US economy, military, and imperfect democratic institutions. Inertia is powerful. The world's financial plumbing is built around the dollar. Switching would be massively expensive and complicated. The unit may be a shiny new car, but the dollar is still the road network. The world's financial future is uncertain, but the race is on.